This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode.
Hey, welcome back. In today's short, brief episode, I want to talk about the actual pending decision from MSCI, which is one of the major indices on par with the S&P 500. And the decision they're about to make could either be a make or break situation for digital asset treasury companies that are on that index, namely MicroStrategy, but other hundreds of publicly listed digital asset treasury companies. You got MetaPlanet and Simon Scientific and a whole heap of others who've actually copycatted what Michael Saylor and his strategy firm has done in terms of adding digital asset holdings on their balance sheets. So why is this important decision from MSCI? It's because it's consulting whether they're going to exclude companies holding particularly large amount of digital asset holdings, whether it's Bitcoin, Ethereum, or indeed any other digital asset holding in its corporate treasury reserves from its equity indices. Now, the timeline by which MSCI needs to ratify their decision, their final decision, is expected by January 15th next year. The criteria under debate is on firms holding more than 50% of assets in digital assets like strategy, which is the main focus. Now, what could be the immediate impact of this decision? Well, it could require forced selling of those digital asset holding companies to exclude the over 50% portion of the digital asset holdings from their corporate treasury reserve. So if they were to be excluded, passive funds tracking MSCI indices would be required to sell shares, creating billions in outflows and particularly prolonging this ongoing bloodbath that we are seeing left, right and centre across all financial and crypto markets as well. It will further add to liquidity strain. Digital asset treasury companies rely heavily on index inclusion in order to capture liquidity inflows. Exclusion could depress valuations. The credibility risk for MSCI could also be in factor because if they were to exclude these digital asset holdings, they may be seen as arbitrary or anti-innovation, potentially undermining the actual MSCI's reputation with investors who view Bitcoin or indeed other digital asset as a legitimate reserve asset. And finally, the other last impact that I could see could be the sector contagion. Now, what I mean by this is when other firms with significant crypto treasuries, not just MicroStrategy or Strategy, could face a similar pressure, well, that in effect could reduce institutional appetite for corporate Bitcoin or other digital asset strategies. Now, what's Strategy's position? Because remember, it's the largest corporate holder of digital assets. It currently holds over 650,000 Bitcoin holdings, and Strategy is the most exposed to this decision. It also could jeopardize its index status. Now, Strategy is currently included in MSCI indices, but its future depends on the outcome of this review. And lastly, the strategic risk. The exclusion would reinforce its identity as a pure Bitcoin proxy, but at the cost of losing passive inflows and mainstream index legitimacy. Now, as a final remark, I think this is just a way to further manipulate and capitulate the extent of innovation that we have been seeing to date in digital assets, in crypto industry at its entirety. So I just think it's not going to work out well if MSCI does make that bold decision to exclude digital asset holding companies, particularly those that have over 50% of exposure in digital assets. I don't genuinely think that would be a good sign for MSCI. I don't think that would impact so much the crypto industry, right? It will only impact the proportion amount of liquidity inflows through passive funds. I think that's the only risk that is at stake. And for that reason, particularly for those of us who are shareholders in these digital asset treasury companies, to not act in haste or try to preempt or dump their stock until we've actually have clear sight as to the actual aftermath of this decision making from MSCI. Like I said, I think the risk is going to be limited. And I wouldn't be at all surprised if Michael Saylor and other digital asset treasury companies are going to be perhaps lobbying against MSCI to not make this decision, because I think it's really going to impact on its reputation. I'm talking about MSCI's reputation as being dubbed as anti-crypto, anti-innovation, anti-21st century economy. So I think that is more of a stake for MSCI as an index more than an impact on the digital asset treasury companies who could potentially lose out in its index more than anything else. So the bottom line is, let's not preempt and start dumping on our existing shares that we have with these digital asset treasury companies. Let's be cautious. Let's, of course, monitor the situation, particularly on January 15th, where MSCI is expected to make this decision, and just act accordingly.
That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.